Have you heard about Nexa Mortgages' Build Your Branch model? Nexa's structure and similar mortgage brokers like it started shaking up the mortgage broker industry a few years ago, offering loan officers the chance to create something of their own within someone else's business and take home all of their commissions. But is that really true? And what are the facts that loan officers need to consider when they're making a move into the broker space and understanding what you really want? Welcome to the lab, the Real Estate and Mortgage Business Academy. I'm Megan, and I'm here to help loan officers, mortgage brokers, real estate professionals, and entrepreneurs grow their business and achieve financial freedom through business ownership. So today's video is all about understanding branch broker models. We're going to break down using how Nexa Mortgages' innovative Build Your Branch model got started, roughly how it works, the difference between branch ownership and true business ownership, options loan officers should consider while transitioning into the broker channel, and a new program that lets you transition into real broker ownership with support every step of the way. So if you're a loan officer looking for clarity on your next career move in the mortgage industry, this is for you. So let's start and talk about how does Nexa Mortgages' branch model work? And I want to put a disclaimer in here. I have never worked and created a mortgage branch model under someone else's business. I've worked at a brokerage, I've worked at a retail lender, helping people open branches, having one of those branches, and I've opened my own brokerage that has branches, okay? But I've never worked at any of these companies, so you have to do your own homework. I'm just giving you information that people shared with me so that I could share this information with all of you in these videos. What did Nexa start in the broker industry with their Build a Branch model, right? That gives loan officers access to create their own branch under Nexa's umbrella. So since Nexa, there have been a wave of mortgage companies that use the same or very similar models in the mortgage broker landscape. Some of the other companies that use similar models that you may have heard of are Edge, Barrett, C2. I could literally probably list about 25 of them now. Some you haven't heard of. Now, here's why broker branch models are attractive. You get to keep all of your commissions. At least that's how it's told or said, okay? We're going to walk through that. You get the support of back office, and we're going to talk about what type of support this is. And if you're coming from retail, is the support the same that you're used to? You can scale up without worrying about starting a business from scratch. And you're backed by what's now become more recognizable brands in the mortgage industry, although some of them do let you white label using your brand names. Let's talk about the you run your own thing. So I've talked to loan officers who tell me when they have a branch at one of these broker branches, they tell me that they own their own branch. But here's the catch. You really don't own anything. To own a business in the mortgage industry, the easiest way to say it is you have to own the company license. And so if you don't own the company license is what has to come first before a branch license. Yes, you own that branch's revenue that comes in for sure, but the minute you're gone or the minute something closes, just like at any company, right? You really aren't the one in control. So there are things that you cannot control that could happen. While it does have some features of ownership, just like in retail when you own your P&L, right? That it does, you don't have true ownership like a business owner does, like I do when I owned my mortgage brokerages. And yes, you're managing that branch, you're making decisions still within the company's umbrellas, but the company, if it's Nexa or one of the other brokers, they retain control over key decisions, what loan systems you're allowed to use within their systems, what website providers, all the key decisions. Usually I have found that they give you maybe one or two options that they want you to use. And then they have their operational policies, which this is the space where I have gotten a lot of feedback from loan officers where they've struggled, or at least in the beginning they struggled. Let's unpack how these branch models work, exploring some of the pros and cons of the branch ownership versus true business ownership, because they both come with positives and negatives. And I also want to introduce a unique approach that has started helping loan officers really have an option to take control if instead of branch ownership, they want to eventually own, which there are a decent amount of loan officers that's the goal when they go into the branch model at first, that eventually they want to own their own business. Being given a branch is nothing new, right? The mortgage industry, from retail lenders, they've been using this model for years. And I feel like brokers started following suit somewhere around 7-8 years ago. Is when Nexa was one of the first ones, Edge. It was after 2008 that these brokers came out with these new models to really put all the responsibility on the loan officer, giving them ownership of their commissions, right? Now, the business, if it's Nexa or Edge or C2, they receive the checks. You don't receive the checks. They receive it. And then you have a P&L that expenses are deducted from. And so when those expenses are deducted, then it comes out. Now, the biggest difference is that you still have to pay all the costs. So usually there's a per file or a basis point cost that comes off. Any of your licensing costs, any of your staff, employees, LOAs come out of there. Every single thing, credit reports, your LOS, you pay for every line item. Where broker branches are different from retail is in the type of support though. After the commission, right? Let's put commission aside. Let's talk about now the operational support, because I feel like this is where people will jump into the broker branch model and it's not what they expected and they're frustrated and they either jump back into retail or they're not sure what to do. The support in the broker branch model is not the same as retail support. Are there some out there? I believe that there is, and you really have to do your homework. But usually in the bigger models, the lower the per file cost, the more you and your team are doing, almost like running your own brokerage underneath it. So in the retail model, right, there is support for everything you do not have to do. Like there's support for everything, right? There's layers of support, and really there's somebody that you can call who handles HR. There's somebody who handles compliance. There's somebody who can, give you something for marketing. There's somebody for everything. These are all the layers of middle management, and these teams will walk you through how to do things, or they'll do it for you. And it's why retail lending has to lock at higher rates. They need to make more money to pay for this middle management. They have more overhead to cover. So if you're walking out of retail because you want lower rates, right, you have to understand the decision that you're making is you are going to, if you go into a branch model, you're taking that all over and you're going to have to figure it out. Just like when you open your own brokerage, you have to figure it out. So if you're leaving retail and you want the same support you had when in the retail model, you need to look for the right broker model to have that support. You need to really do your homework and understand that you're going to have to pay for the support. No one's going to give you anything for free. That's just the honest truth. And many times for people out there, that's been hiring someone. Branch ownership, some of the pros of it is you do get some structure, right? There is someone to reach out to and ask questions on how or where to go to figure something out. There are tools that they'll recommend. So there's some framework of guidance and there's training you can opt into that you can pay for. This is what happens in, the retail lending space, but at a much higher degree. In the broker world, the margins are smaller. And remember, you're really trying to remove that middle management. So the guidance is much less, but there is some there. And really you are finding your own way. And I've been told that the branch model at some companies, that it's really painful for 6 months and then it gets a lot better is what people have shared with me. There's less risk up front when doing a branch because you're not starting from scratch like someone who is opening a whole brokerage. There are recruiting bonuses for every loan officer you bring into the company that you can get an override on. The cons is that you are operating within someone else's framework. So if you recruit people in and you eventually realize that you have a big enough team, you'd like to own your own brokerage because instead of the amount you're getting for those people, you'd now be getting 3 times as much. If you leave, that's gone because you don't own it. Your income potential is also capped to an extent and you don't truly own your business. You can't sell it down the road. If you leave, you're going to start over. So if owning is something that you've always thought you wanted to do, that's for those of you, I would really explore things and think about things before you jump into any type of model before knowing what's going to help you the most get to where you really want to be. So for business ownership, some of the pros are you have full control over revenue, meaning you receive the checks because you're going to be the one who's going to open and own the company license. You make the decisions. You are the one who decides how the business operates, which for a lot of people, that can be a con because you've never operated a business. So how are you going to do this? You're building something that's entirely yours and it has unlimited income potential. Now, the cons of owning is that it requires more effort and it requires more money up front. So you have to set up systems. You have to figure out how compliance and the operations is going to work. And you're going to have to figure out who's going to help you with those things. If it's you hiring, learning how to do it and training them, or finding someone who's going to help you figure out how to do that. No matter if it's a good or a bad decision, you own it. And you get to sell one day. So if you ever want to walk away and sell your book of business, mortgage broker owners, if they set up a solid business, actually get a check for someone to take over their business, take over what they've built, which is how you start building a legacy. It's why business owners' net worth is typically 4 times more than W-2 employees. Let's talk about some things that you should consider. So if you're unsure where you should go when you leave, wherever you're at, and you want more freedom to make your own decisions, here are, and especially for those of you who are in retail, here are some other broker models that loan officers might want to consider. So you have your traditional independent mortgage brokers, and the traditional brokers run their company kind of like a mini retail if you find the right one. Not all brokers are the same. They bring on loan officers, provide them with things they need, the back office support all rolled into your commission. So they do your commission reports, you get access to marketing support, they do your compliance, right? But then you're going to be getting a split similar to retail, maybe a little bit higher in the broker space, but they are out there. And as an LO, I would say expect to make maybe 1.25 to 1.75 in these models, depending on the market you're in. I just met with a broker owner who has a marketing team, an AI team, and the owner meets one-on-one with every LO on a biweekly basis. Pretty crazy, right? These brokers, they should give you support and guidance, but be careful because, like I said, every brokerage can be run differently. And I speak to LOs weekly that I've met with, many who have joined brokerages that are still using outdated technology, no marketing, they don't have the internal support. Don't just ask people what they have, make them show you. So the branch broker models, if you're coming into the broker space like Nexa or some of the other companies where LOs jump into building their own branch, they do support you being more an independent thinker and decision maker. And yes, you get to make the decisions on what's going to go on to your P&L and get deducted from your commissions. For some people, that works great. For other people, you make less money because if you make bad decisions or hire too many people, you're going to make less money. And you're cutting an amount off the top that if you owned, you would have that wiggle room to make mistakes, make decisions. You do have access to training that you wouldn't have if you opened your own. You'd have to create your own training and mentorship from whoever your sponsoring LO is. And as long as you're willing to pay for it, you can continue to get some of that training along the way. Now, operational support, even though this looks different than most brokerages and retail branches, LOs who just came from some of these branch models were telling me that they as LOs were responsible for closing out their loan files, meaning when they closed a file, they had to go through a checklist, make sure every form was in there. That's not something most people in retail are doing to be able to get their paycheck. That's what your ops team is doing. You're just getting business. Under branch models, right, I would say negatives, you don't truly own your business. Now, this model is great for LOs that have been an LO at a brokerage already. You're pretty resourceful. You don't mind taking the time to figure some things out. But I've found that for a lot of people in retail, jumping right into the branch model does create a pretty hectic first 90 days to 6 months. Now, opening your own independent brokerage, doing it yourself, going independent, that gives you your maximum decision-making ability, but it requires a steep learning curve too if you're going to do it on your own. It will take you some years to build your foundation. You will make mistakes. You will spend money from your commissions on things that you don't need until you get the right helper, until you try enough things that don't work, until you figure out what does work. That's really how I built my brokerages. And then some of the newer models that have started coming out, which Collab fits under that category, is we have a hybrid approach. And it's designed to help ease loan officers into business ownership. And so we created a franchise, Collab Mortgage franchise, and it provides everything a broker needs, every HR form, every compliance form that's needed. It gives training. I'm not even going to go into it. It sets up the LOS and the CRM, has all the support tools, a proven system, while you get to retain full ownership and not have to give up as much as those per files are taking. You get to keep the business and decide how you're going to pay for the support you need so you can just start making more money from the beginning. Now, we added one last piece to this, which is what's called Collab's transition team, which it's designed to help bridge the gap between doing the branch first to make sure you want to be a broker and opening your own business. And so we have what's called a transition team where loan officers in retail will get sponsored by one of our Collab brokerages. If you're in one of the states that one of us are in, and you are taught and helped how to do everything while you're transitioning and filing to get your own brokerage opened with our franchise, broker in a box model. When you do that, you get to start seeing how to originate like a broker, how to start opening your brokerage. You get the support from a team that you're used to when you're in the retail space before you're ready to really spread your wings more. So the transition really does feel a lot more seamless, is what our broker owners have told us. And at the end of this program, you own your own business, your own revenue, and your own legacy. This isn't just about managing a branch. It's about creating financial freedom and owning a business and building a future that's really yours. It's one of the things I've been the most excited being part of and building for other loan officers out there. Building your own branch in the broker model, it's a great fit for loan officers who want most of their commissions, are okay with figuring it out, being resourceful, and they really have no interest in business ownership, creating that legacy for themselves. If you're looking for more autonomy and the ability to own your future, consider exploring other broker models like franchises, independent brokerages, the transition team. And if you want to ease into business ownership with support each step of the way and have it be really smooth for your clients, for your team, for you, that's where that transition team really could be a perfect fit. So I appreciate each and every one of you who come to this channel, learn more about ownership in the mortgage industry. I hope this video helped clarify some of the differences in ownership in the mortgage industry between branches and the business ownership. Hit that like button and subscribe if you haven't already, and share this video with your network if you know anyone who has had questions around what they should do with their mortgage career, where they should go. Let me know in the comments, what questions do you have? What support are you looking for? Do you want to own? Do you want to just get away from where you're at? And if you're interested in learning more about our transition team or our broker in a box model, reach out. I'd love to help you take the next step. There's a link down in the description. Schedule a Zoom and we'll get to meet, and I'll at least start pointing you in the right direction. Otherwise, I'll see you in the next video.